Do you think they're still willing to beat down growth to get inflation lower?
Yes.
It's more likely that they hold rates here or maybe one more rate hike as opposed to go ever higher.
This was the Fed trying to back into the shrubs and disappear.
The massive policy tightening that we've had is going to have an effect on the economy. It's just taking longer to percolate than people thought.
The Fed absolutely has more ammunition in its tool belt to continue to raise rates closer to that 6% target.
They were already wrong once on inflation with the promise of transitory. They can't be wrong again.
The Fed's getting its way here. It's removing some of the demand, some of that froth, and yet, not crushing the economy.
But there is this risk. This risk is still out there that maybe inflation starts to pick up again.
I think where the market may be a little bit off base is to think that the Fed's going to ease a lot in 2024.
Can the Fed be cutting rates next year if the headline figure is still running north of 3%, north of 4%?
The services prices are going to be a concern for the Fed.
The SAG strike has a lot of spillover effects. We've got the UAW. You could see more headwinds.
For them to cut rates, they're going to have to see unemployment go up. They may actually tip the economy into recession first before they start cutting rates.
The good news we've gotten on inflation recently further emboldens the Fed to actually get to that 2% target.
This is critical.
Suddenly, the data is not a reliable forward-looking indicator.
They're flying blind, and Bob, I would say they're as data dependent as we've ever seen.